Also welcome on board Aditya Agrawala, who is here with us on the show. Hi Aditya, good to be speaking with you. Seems like a good morning for the markets as well. It's a gap up start, but what do you make of this market, and sectorally, which sector is catching your attention?
Hi, Shishri. Thanks for having me on the show. Good morning to you. Definitely, I think one sector which will be in focus, we all know, will be the defense space. And we are looking at most of the stocks opening with a gap up. And I think so you will see an extended rally in the defense space as well. Second, I think banks are also something to be looked at because they've outperformed recently. Went into a consolidation phase, and think if market actually holds above 24,400, 24,500 mark on the Nifty, Bank Nifty 2 will try to scale past the key resistance levels of 55,000. And if 55,000 is taken out on the upside, I think Bank Nifty can easily scale past 56,000 as well. So I would look at two sectors predominantly, banking and defense. These are the two sectors that will be in focus, and I think so you should see a lot of movement on the upside as far as these sectors are concerned. Third could be metal stocks as well. Keep a close watch on the metal stocks. They could also be in focus.
So would you buy the market after a gap up, or you would not buy the market after a gap up?
I would go ahead and buy the market after the gap up because I think you will see levels of 24,800 in the near term. So definitely go ahead. Let the market settle down is what I would say after the market opens with a gap up. Let it settle down for 15 minutes, 10 minutes. And then if they hold above 24,400, definitely go ahead, buy the market for a target of 24,800 with a stop loss at 24,200 on the downside.
Okay.
And what do you make out of this particular gap up, and which are your stock specific picks?
Shrishti, absolutely bang on when you mentioned about the VIX because on Friday itself, we were looking at an elevated level on VIX, and 2320 was the level which usually is the zone from where it has been turning around. And today we have seen VIX down 20%. So it shows comfort in the market, absolutely, post a gap up opening. And if VIX sustains below the level of 18, I think easily market will test levels of 24,800, 24,900 on the upside. We are almost on the verge of breaking into this consolidation zone, breaking out of that consolidation zone. Rather, 24,590 is the resistance from which Nifty is about to break out. And I think one should actually look at going long on the market at current levels itself with a stop loss, as I mentioned, 24,200. Look for a target 24,800 at least. And if that is breached, 25,000 can also be seen. Talking of stock specific, I think the big bank Reliance is something to watch out for. That will help the market cross these key resistance levels that I'm talking about. At current levels, I'll go ahead, buy Reliance Industries, look for a target of at least 1,500 on the upside, place a stop loss somewhere around 1,400 on the downside. I think this is one stock that should be bought. The second on my radar is Bharat Forge. Again, we've seen a very good strong closing on Friday's trading session. We're seeing a continuation of that. I think Bharat Forge should also be bought at current levels for a target of 1,300 on the upside, place a stop loss somewhere around 1,150 on the downside.
All right, Aditya, appreciate your time. Thank you very much for joining us. Nilesh Shah, Managing Director of Kotak Games.
If you like this video, then like, share and subscribe to ET Now.